Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Benuli. Today we have Dr. Marc Faber and Ira Harris. Dr. Faber is the editor and publisher of a widely read monthly investment newsletter, the Gloom, Boom, and Doom Report. And this highlights unusual investment opportunities. He's also the author of several books. He's very well known for his contrarian investment approach. And Ira is hedge fund manager, a global trader in foreign currencies, bonds, commodities, and equities for over 40 years. He served as CME director from 1997 to 2003, and also a stint most recently. Welcome, gentlemen.
Thank you for having me on your program, and nice to see you again.
Yes, this is, as you know, a great pleasure for me. So thank you, Richard, for making it happen. And I think there's lots to talk about, but I'm gonna give a big pat on the back, because I think when we go back and listen to, and I did, to our previous one, I think the stock picks of Dr. Faber and some of my own worked out pretty well over this period of time. Being in ag and mining, some banking, I think, have been really good investments around the world to get us through this time period. So hopefully we can get to other ones that'll be just as profitable going forward.
Great that we begin with a discussion on your views for the global economy and the financial markets. Dr. Faber?
Well, as everybody knows, central banks are talking about tightening money. But to this subject, I'd like to just observe, we have now in the US inflation officially, by the statistics that the government chooses to publish. They test them first and then they publish them. Inflation is running at 5.6 to 6%. Every household in the US knows that lots of prices are going up by much more than 5% per annum. So private economic services, they put the rate of price increases for consumer goods and services at anywhere between 7% to 15% per annum, depending on what kind of a family you have. Do you have children? You don't have children? What is your health care insurance premium, and so forth and so on? So there are lots of things that vary from household to household. But I would imagine prices are going up in the world by between about 7% to 12%. That would be my impression. And then they talk about tightening. In order to get the Taylor rule observed, the interest rates would have to go to at least 6-7% per annum, at least. But they talk about increasing interest rates maybe this year by 4 times or 5 times, 0.25%, maybe even only 1/8%. So that would bring us up to over 1%. When inflation is around 6 to 12%, as I said. So this is a tightening that is only a relative, and the experience in history has been that when interest rates, and they've never been interest rates below the rate of cost of living increases when there were free markets for money. But once central banks were introduced, they kept interest rates artificially low, as in the 70s. And whenever interest rates are negative in real terms, in other words, the rate of interest is below the rate of cost of living increases, or as they call it, the CPI, the Consumer Price Index, or the Personal Consumption Index, the PCE. When that happens, inflation accelerates, period. That is usually the outcome. Now, there can be times when inflation comes down because, say, the inflation is driven often by commodity price increases or by genuine shortages that can occur during war times and so forth. But in general, the rule is that if you have interest rates that are below the cost of living increases, that the inflation then accelerates. And I would imagine that this will be the case. And I can also see that central banks are in no position to adjust interest rates to 6%. Because if the Fed fund rate is at 6%, the whole system collapses under the weight of interest payments. So we are in this situation where, as Friedrich Hayek pointed out, the more the government plans, the more difficult it is for the individual to plan. Okay. And we don't know what the government, and the government, you have to see very clearly, is a tiny minority of people that has no interest whatsoever in what happens to you and me and anyone. Their only interest is in themselves. They are a club, a fraternity of people that protects itself against all the other evil people, the businessmen and the workers and so forth. So I think we are in a difficult situation, and it is surprising that stocks are as high as they are in some sectors still, given this uncertainty that is created by these bureaucrats in government. And number two, the larger the government is and the more they intervene, the slower economic growth rates will be. That is very clear.
Interesting. In your thoughts, Ira?
Oh, it's a really good jumping off point. And I mean, I'm sure having read Dr. Faber, let's see, I'm doing this for 45 years. So I've probably been reading him for 40 years for sure. I mean, I laugh. They say they're hawkish, right? I can look right now at my screen, the December 22 Euribor, right? Which is the equivalent of, well, what we used to call LIBOR, and of course in America with the euro dollars, now we're going to SOFR as the transition is taking place. And, oh, let me look. Oh, wait, December, it's at 99.91. So they're hawkish, and they're the market, and this is the market being directed by them, has now gone from, I can tell you very definitively, we don't have to guess. So it's gone from, since the ECB meeting last Thursday, it's gone from a anticipation of negative 20 basis points to positive 9. Positive 9 with, as Dr. Faber points out, and Richard, you, and listen, we're on the Financial Repression Authority. Nothing says it better. Headline inflation is 5.5%. And we're talking hawkish at 0, or I'm sorry, 9 basis points. This is hawkish. The media needs to be slapped really hard. Instead of always saying, thank you for taking my question, they should stand up and be appalled and go, where should we, there's no word hawkish here. As Dr. Faber says, so if we had a rule and we went to John Taylor and said, okay, where should we be? 6%? Okay, 4%, 3%. Hawkish, there's nothing hawkish, and yet every headline I read, oh, the ECB was hawkish. I laugh. We've lost our collective minds, and the fact that the media genuflex to this powerful crowd, as Bernard Connolly, continually call it Davos, man, and I think that's absolutely right, for lack of because it captures the totality of it. This is preposterous. The Fed hasn't even raised, it hasn't done anything officially yet, except, of course, cutting back, curtailing QE, but they're still adding reserves. I go back to December, and Powell showed me all I needed to know yet again. The fact that the Fed didn't end QE in December was an abomination, because that would have at least given them some flexibility. The fact that they cut it, we knew what they were going to cut it. But if they really wanted to start raising rates in any aggressive manner, they would have ended QE. The dollar would have probably rallied, but as we see, the dollar is only going to rally so much. It's not a rally like before, because that's it. And I'm sure we'll get into that. The dollar is a whole nother issue. But don't tell me you're hawkish. The media is it's an abomination that they could absolutely say hawkish. There's nothing hawkish. As I said, if I ran the Fed right now, we would be at 3% interest rates. Either that, or we'd be at 2%, and I'd say we're stalling, we're going to stop here, and then I would embark on an aggressive quantitative tightening program. Not do it like he did it back in 2018 when he did both, because he didn't know how it was going to play out. But if you want to go to quantitative tightening, which nobody seems to want to do, not Lagarde and not Powell, then we'll really get some fireworks in the asset market. So I wish they would do it when Raphael Bostic said $100 billion a month of quantitative tightening a couple of weeks ago. I jumped out of my seat. I said, hooray, great. I know what to do. I'll be very patient, but I know it's not going to happen. So thank you. There's nothing hawkish going on, except probably in Moscow, Sao Paulo, maybe a couple other places, but there's nothing hawkish going on in the world of global finance. So I'll stop.
And between interest rates and quantitative tightening, Dr. Faber, which do you see as being more influential, more of a factor on the financial markets? Is it a bigger factor on quantitative tightening, do you see?
Well, I think that if they did reduce the balance sheet, which would be essentially quantitative tightening, I think the impact would be significant, certainly on the bond market. But I'd like to say one thing, that although I have no high opinion of the current Fed governors, the current monetary policy of printing money, essentially, whenever there is a problem, goes back to Mr. Greenspan. All the economists I read and talk to and so forth, they always say how poor Fed Chairman Arthur Burns was, because he was relatively, during his regime, inflation accelerated. But to be fair to him, he repeatedly increased the discount, the prime rate at the time to 12%. But it was still below the rate of inflation, so inflation accelerated. But if you look at his regime, which began, I think, in 1973 or thereabouts, or 1970, and finished, I think, in 79, he was
No. I mean, it finished in 76 because after him we had G. William Miller, right?
Yes, correct. I
Okay.
was just about to say it finished in 76.
Yeah, I don't
But
mean to.
anyway, during his regime, several things were changed, like how they measured the CPI and the personal consumption expenditures. So he's been widely attacked. But compared to today's Fed governors and the Fed chairman, including Yellen, Bernanke, and Powell, at least he increased rates whenever inflation accelerated again. Whereas these Fed chairmen and their lackeys below them, who never opposed the Fed chairman, they just keep interest rates at the low level forever and create a very artificial, surrealistic investment market. And I think they will be punished very badly by the marketplace at some point, very badly. But we don't know when. And the one thing I can say is that Powell, he tried to tighten monetary policies in 2018 and increased the Fed fund rate very slowly. But then in the summer of 2019, in August 2019, there were some problems in the repo market because there was a relative tightening. And immediately they started to print money again, with the result that by the end of 2019, way ahead of COVID, the balance sheet of the Fed was again at the record. In other words, they started to print money, not because of COVID, but before COVID. And then they used COVID as an excuse to print money like there was no tomorrow. And I think that if they increase interest rates, even relatively, and I believe that if the program that they pursue of quantitative easing continues at the present rate, there is the relative tightening of money because the same amount of bond buying per month on a larger and larger government debt and larger private debt is percentage-wise diminishing. And therefore, I'm actually very bearish about the economy. I think that if they start to increase interest rates at the present time, and it's probably the more desirable outcome than to do nothing. But if they increase interest rates here, even in small steps, and especially if they pursue a global monetary tightening, as some central banks have already begun around the world, just not in the US. And Lagarde, she's clueless. Actually, she's not only clueless, she's been convicted for corruption. Now, to be convicted for corruption in France, I guarantee you that you have to be ultra corrupt because the whole country is corrupt. So to get convicted, you have to have, I mean, almost a criminal record, something very bad. And she is the head of the ECB. But this is what society is at the present. We have elected officials that are completely dishonest, unethical, but nothing ever happens to them. They get promoted. And if they retire, they get the same pensions and so forth and so on. And they vote benefits for themselves and privileges for themselves that ordinary people don't receive. That I want to make very clear. We have a sickening system because as long as we had a feudal system and the royalty, if one of the royals misbehaved, his head was chopped off. and he was responsible for things that went bad. Who do you want to make responsible in a system like we have under democracy? Everybody says, well, I'm just doing what I'm told to do. They can take your finger clipper away at the airport. We do what we are told to do. They don't believe in it, but they do what they're told to do. I know a country that always said the same after the war. We were told to do so. Nobody was responsible.
Your thoughts, Ira?
Yeah. Well, so yes, and Lagarde just follows whatever the U.S. does, but that's why she was put there. So I agree. You know, she's a very capable politician. She's a miserable financial mind, and I mean, she's proven it over and over. You know, we go back to when she was IMF director, which was also done under a cloud a cloud of being suspect, right? Dominic Strauss-Kahn, who was certainly capable as an economist and financial person, all of a sudden got removed from the scene pretty quickly. And then we know what the IMF did with under Lagarde's control, which of course was bail out certain European banks. So by bailing out Greece in the way that she did, I mean, so there was a reason that they brought her into the ECB, and she's fulfilled that role. But they are in a very, very precarious situation. And now that Wiedmann is out, but Nagel is in, and he seems a little bit more vociferous, as does Lindner, who's now the finance minister. So she's getting pressure, but she comes out there to her press conferences, and I watch every one of them. And people say, oh, she's hawkish. I kept, as I wrote a blog the other day, I didn't get the sense of being hawkish whatsoever. Everything she said to me was dovish because she was busy walking everything back. But if you thought it was hawkish, inside that meeting, the ECB board, there had to be great amount of conflict. That much I know. I don't care what the vote says. I don't care what it write. I have the right here, the policy, the press release. It's a joke. I don't care what it says because that's not what went on there. And of course, you know, Klaus Knott comes out over the weekend and all of a sudden he's more hawkish. So there's a lot of dissension in there. And I think that's what the market's responding to, that she's going to try to hold back the dam, so to speak, because when that breaks, she's going to have an issue of the credit spreads in Europe, the sovereign spreads. You know, I'm looking right now. I just ran them. The French, the German. You peg everything to the Bund. So we look at the Italian, and even the FT woke up yesterday and talked about the widening spread differentials between Greece. Although Greece was actually mentioned in the monetary press release directly about how she's going to use optionality and flexibility. Well, optionality and flexibility, let me explain it to all those who really don't understand the way the ECB works. That just means that she's going to override the rules of the capital key, which are supposed to be the backbone of how this all works, right? The capital key, the ECB is only supposed to purchase assets in relation to what your capital contribution is to the ECB based on the capital key. Well, that won't work anymore because as the market attacks what we used to call the pigs or peripherals, the ECB has to change the dynamic because they have to buy more Italian, they have to buy more Greek, they have to buy more Spanish, and those spreads are blowing out regardless, by the way, from where they were. So they've got a lot of work in front of them, but it's all going to come back to me, to Karlsruhe, to the German Constitutional Court, where they're going to look at this again because somebody's going to bring the case. And the fact that the ECB is wantonly and willfully violating the original Maastricht Accord, and then the Lisbon Pact about how this is supposed to operate. Before the German High Court bent each way that they could so as not to, during the height of the Euro crisis in 2012, 13, and 14, they played politics with it. But at some point, this is going to change dramatically, and it's going to upset. And I'm very worried because the debt structure in Europe is such that if things start to get unnerved there, and I know this is where Dr. Faber was initially hinting at, but I want to hear more from him about what the bond markets, because if you had a breakup of Europe, to me, you get a massive deflationary shock to the system. And a massive, because of the amount of debt that we're talking about, and it's all guaranteed by the Germans. Because what do you think interest rates in Europe would really be if people didn't want to pretend that the Germans are guaranteeing everything? I mean, I don't know that the Germans understand it, but certain people, the Germans, without the German credit card, rates would be so skewed. Italian rates would probably be 8, 9, 10%. We saw Greek rates, we saw Greek 2-year rates go to 40%, right? Before it all got capped. So we've seen this. Could the world take it? Not a chance. And banks and hedge, they'd all be crushed, and the deflation. And we know, and that brings us full circle, because I know we'll get to the bond market, but the Bernanke, well, I don't know if Greenspan I would put in that camp, but Bernanke and Yellen and Powell, but I would say all central bankers, everybody, they don't fear inflation, because Paul Volcker taught them how they can slay inflation. Under the Bernanke regime in 1937, that Bernanke always used as his operative modality, they fear deflation. And they're in such a situation now that fear of deflation, to me, makes me very continually bullish to metals. And people talk about, well, gold went down even with inflation. If you're buying the metals because of inflation here now, you don't really understand the global financial system. That's a reactive. People who are buying gold, and somebody's out there is a massive buyer of gold, by the way, massive, because it tries to break, and this is with interest rates going higher, whatever that means. Of course, we know nominal rates are still probably, well, if we use the overnight rates, I would conservatively say they're 350 to 400 basis points negative real yields. So that makes gold attraction. But I think the gold market is getting nervous that the central banks are going to, as Dr. Faber talked about, going to panic again and set the wheels in motion for, lo and behold, more money printed.
If there were some type of crisis in the European bond market, Dr. Faber, do you see the potential for international capital flows into U.S. equities or precious metals? What are your thoughts?
Well, it's already happened. There is a lot of money that went from overseas into the US. Otherwise, the US dollar wouldn't have been this strong. I think that Ira correctly pointed out that Lagarde is basically a poodle of the US, and she will do what she's told to do. That I believe. I also incidentally feel that in the US, the Fed is not independent, but is doing what Biden is telling them to do. And before that, what Trump told them to do, maybe under Trump less so than under other governments. But anyway, I think that in Europe, Lagarde became so-called, in quotation mark, hawkish, because the dollar was so strong and the euro so weak, and that in the eyes of some people is bad for the US if the US dollar is too strong. It's of course much worse for the US if the US dollar is weak, but it was perceived to be a slightly on the too strong side, so they told them you also have to do something. Because the central bankers, they talk to each other every day or every week, or it's not that one does this thing and not and doesn't check around what to do and so forth. Anyway, I think that in Europe, I'm not so bearish about the southern countries, although they're heavily indebted, because now they had a few years' time to offload the real garbage onto the ECB. You understand? The ECB has some quality standards, but if you look at the bureaucrats that are at the ECB, they wouldn't know what the good quality is and bad quality. So they buy every garbage. And then there is another issue that is the most important issue. The US, which has military presence in Europe, God knows for what, but they have it. And they basically control politically Europe. That we have to be very clear about it. They do not want Europe to fall apart because they're afraid. That was the big issue about Greece. They were afraid that if Greece leaves the EU, Greece will find a happy partner in the form of either Mr. Putin or even more desirable for Greece, China. And then the hegemony of the United States in the Western world is obviously then challenged. And that the US does not want, period. It's not going to happen. And that's why Draghi said under no conditions will we fall apart. We'll do what is necessary to do. And I think that's still the view, especially now that they have a more difficult partner to talk to. Not that he himself is difficult, Putin, but the Russian economy is doing surprisingly well. And Putin is a surprisingly intelligent leader compared to all the idiots that we have in the Western world. He's a genius. But the media, as was pointed out before, they always talk down Mr. Putin, and everything China does is criminal and bad and damaging. The media in the US is not a trustworthy organization any longer. Very biased, and frequently they publish untruths, things that are simply false. And they portray people negatively that do not deserve to be portrayed that negatively. So I'd say there is an increasing geopolitical risk. And each time the economy was really in a lot of trouble in declining empires throughout history, the ruler went to war over something, because that is the one thing that you can kind of rally people and keep them in control. Fear, as we've seen with COVID. COVID has been created by someone, exactly who, we don't know, but it was happily endorsed by Western weak leaders to essentially keep the population under control and fearful, and to print money. It was used as an excuse to print money and increase the deficits and increase the power of governments. Never in history has it happened that the people were told, you have to stay home, you can't go out. You couldn't even go out in Britain to smoke a cigarette in your own garden, never mind the park. So I'm very negative about society. I think the geopolitical risks have increased. I actually admire the patience of Putin, because NATO, under the hegemony of the US, has broken treaties repeatedly. They were not supposed to enlarge NATO towards the east. What they've done, they've enlarged it. And now they're at the red line. Putin will not tolerate American military presence in Ukraine. The way China would not allow military presence in Tibet and in Xinjiang and so forth.
Mm-hmm. And what about Taiwan? Do you see geopolitical risks there to the economy? And
I don't think China wants to invade Taiwan. They basically control it already economically. But the government, the government officials is a different class of people. The businessmen, they travel back and forth between China and Taiwan, and they do business, and they go and have dinner together and laugh together and drink together. And the politicians, they play kabuki theater. Like the Republicans and the Democrats in Washington, they pretend to, in front of the American people, to be two different parties, when in fact, it's like two different mafia organizations, but they work together. They just occasionally have a dispute. How do we distribute? The government budget in the US is $4 trillion, okay? This is the largest in the world. This is larger than most GDPs of countries in the world. $4 trillion on an economy of, say, 25 trillion. And the federal expenditures of 4 trillion in a country that is 100% honest, which doesn't exist, but the 4 trillion would go to all kinds of expenditures for wages and social security and for the military in a highly dishonest country. And the highly dishonest countries are all in Africa. You can read it in the corruption index. It's not published by me. It's published by some UN body. Anyway, in the most corrupt countries, maybe 50% is stolen. In some countries, probably 90%. The most honest countries, they have a theft rate of about 5%. I think the US is probably at a theft rate of 10% to 20%. So 10% on $4 trillion is $400 billion that is being stolen annually.
Interesting. And
by politicians. It doesn't go all in their pockets. It goes into bribes and lobbies and the defense industry and then. But that is in an honest country. If you look movies about the US in the 19th century, one thing that stands out, the villain is always the sheriff, or frequently the sheriff, or the judge in a small town and so forth. The country has been built up, has been told to be honest and decent and ethical and good, but in reality, it's never been that way.
Interesting. Yeah. Your thoughts, Ira?
So, it's so much the world, and just to bring it forth to what Dr. Faber says, today in the South China Morning Post, there was an interesting article, and it was the headline article, and it was that Xi was supporting Argentina in their claim for the Falklands. And I say it's interesting because the history of the world, as we discuss, and the financial architecture that we talk about, is all remnants of 19th century European colonialism. I'm not talking about pre-French Revolution colonial, pre-American, but 19th, that was the architecture of the British Empire. This is all. And it's interesting that the Chinese raise this because, see, they're not static in their view. They're more dynamic. So when you come and you attack Putin, who they now have a much closer relationship with, and others, they're going to push back and go, so much of what you're discussing is a result of the imperialistic tendencies of all your actions. And they're pushing back, and they're causing people to at least think about things. It's the same as Dr. Faber talks about with Putin and Ukraine. Now, the media, which does a terrible job because nobody bothers. And, I have for years been discussing, don't you understand that Gerhard Schroeder is the head of the Gazprom pipeline? And now That's a very fascinating thing, because back in 2005, Schroeder calls an election. By the way, he doesn't have to call, and Germany was just starting to move out from the drag of the Hartz IV agreement with the unions, and things were starting to get better. But he calls the election, and he knew he was going to lose. And what's the thing? He loses the election, which he didn't have to call because he had 2 years left. Merkel wins, and he goes and takes a job immediately in Russia with Gazprom. Okay, why is he out of this equation? Because if you were really looking to stem and lower the volume of bombacity, he's a main player, but that doesn't get done, the media. But finally on Friday, the Financial Times, that used to be a good newspaper, which is garbage, it's just a cheerleader for the anti-Brexit crowd, whoever isn't Trump, we can go on and on. They finally wrote an article about Schroeder. Okay, but that's an important element. But more importantly, into what Dr. Faber talks about, on what promises were made in 1991, 89 to 91 to Gorbachev, when he acquiesced to really a bloodless, and it was amazing. The fall of the Soviet Empire was so bloodless in a historical context, and the Russians say that the promise was made declaratively, not 1 inch more. Not 1 inch more. We will not go beyond what was the Eastern German eastern border. We will not extend NATO. But there is a guy who's alive by the name of James Baker. Richard Holbrooke is gone, but James Baker was the Secretary of State negotiating this. So where is he not to? Why do we just hear ramped up rhetoric, which for the life of me, I don't get from the Biden administration, who was in such a hurry in other aspects of the world to pull back. And now they've elevated the rhetoric and the tone. So yes, I mean, there are so many things, and the media just falls down. So I'm attacking the media here. And importantly, and I say this tongue in cheek, but it's not so much tongue in cheek. So when the United States says we're sending 8,500 troops, right, to Eastern Europe, I was waiting to hear Xi say that the Chinese were sending 8,500 troops to the Ukrainian-Russian border to support their ally, the Russians, right? Now where do you go? Where do you go? And if I was Xi, I'd be doing that tomorrow. Okay, how high do you want to?
I don't think Putin trusts the Chinese that much.
You know what? I agree, because I remember, it's funny that you say that, because back in 1952, 53, when the Russians were trying to, when the Soviets were trying to energize Siberia, and Mao said, oh, we can send people to help you do this. And Stalin said, no, thank you. We don't want 6 million Chinese tomorrow colonizing Siberia. So I think that's the only thing holding them back. But the gist of the argument remains.
And just a final question, Dr. Faber, in terms of the asset classes that you like the most or least, given this current environment that we've discussed, what areas are you bullish or bearish on? Commodities, agriculture, mining, hard assets, or Asian equities?
I think we are at the very fascinating juncture in asset markets. And let me explain. In 1989, the Japanese stock market was at the peak, and its value was 50% of world's stock market capitalization. And my sense at that time was that the Japanese stock market, and I made some bets about it, would drop by at least 50%. I was not bearish enough because I'm usually not that bearish. And so I underestimated by how much it would go down and for how long it would go down. But anyway, I thought when the Japanese market collapses, it will drag down everything else, which usually happens in market downturns. But not in the case of Japan. Japan went down in the 1990s, and America went up, and the Nasdaq went ballistic, and other emerging markets until 94 also were very strong, and some like Hong Kong until 97 and so forth. So we can have a situation where money flows out of one sector, like also in America in 1980, the oil sector and energy related was 32% of the S&P 500. And that then went down, but then other sectors, financial stocks went up, food stocks went up. All the companies that had been hurt from inflation in the 70s, this was the period of disinflation. They went up strongly, and the Nikkei and so forth. So my sense is that today, the FANG and related stocks, the meme stocks, the concept stocks, the SPACs and so forth, that is finished, and it's finished for good in terms of this huge outperformance they had between 2009 and recently in the US and vis-a-vis the rest of the world. What this outperformance has created is value in emerging economies and in Europe, and especially also in Latin America. So I see actually great values in Latin American equities and in Asian equities. And that's where I would focus. But I'd also like to say that in the commodity markets, if you compare commodity prices to equities and to other assets, commodities are relatively low. Oil is still very cheap compared to gold and to everything else. So you see, there's plenty of opportunities, but obviously if we have the collapse, as someone like Jeremy Grantham predicts, that everything collapses, then we have a problem, and the problem will be also your life, how society behaves. I think with the defund the police state in the US, life in big cities will not be very pleasant. So, you know, if everything collapses by 80%, you don't worry so much about your portfolio. There will be plenty of other worries. Mm-hmm. But I would say, as Ira pointed out earlier, gold looks like being a very stable store of value. And I would still tell my investors, you know, you have to have, if you look at the central banks, how can you trust people like that? How can you trust someone who doesn't know what he's talking about, or he lies blatantly? I can show you so many examples where Fed members have, and they all went to university, they're all academics, doesn't make them intelligent, but at least they have some basic knowledge, or should have. And if they tell you certain things about economics that are fundamentally wrong, then you have to assume that they're lying to you. How can you trust these people? Therefore, you have to have your own gold reserves, your own silver and platinum reserves. The only thing is, if the government could tell you, you must get vaccinated, otherwise you lose your job, or you can't go out of your house, like in Austria, they're mad. Of course, the Austrians are the perfect Nazis. They are sheep that behave, that believe in their Kaiser Franz Joseph, in the authority of the state. But it's maddening that I went to school, everybody told me at school and university, oh, democracy is about freedom. I don't see any freedom at all in democracies that didn't exist. In China, we have probably more freedom than in America, in Thailand. I have a lot of freedom, but I just can't criticize the king. But that's okay. That doesn't bother me. His life doesn't interest me. But I would hold some precious metals, and I think the one with the largest upside is actually platinum.
Me too.
Okay.
It worries me if we agree.
No. I was going to ask you about that. So you beat me to that because I look at it on a relative basis, and I know where it's been historically. And I was laughing. Some people I talked with yesterday, I said, how about if you see a headline in response to the belligerency of certain U.S. officials talking about, Putin says, you know what, I'm suspending platinum exports. And there's already a shortage every year. I think the two metals that are biggest shortage are silver and platinum. Gold, there's always gold, but platinum has a utility value, and especially in the green revolution, it has a role, as does silver, but platinum has a severe, and Russia is the second biggest miner of platinum in the world after, of course, South Africa is a huge gap. But I agree. I'm glad to hear you say that, because I think that there's a lot of potential to that upside. It's just been, I'd like to see China come out and announce that they're doing another platinum panda. It would help boost some prices. But I agree. So thank you for walking down that road.
The only thing is we have to decide where to store it, because what I wanted to say, if the government can intervene in your private life, suddenly they say, well, it's not patriotic to hold precious metals, and we have to collect it and take it away from you. You understand? Then we can have a gold buyer's strike, like the truckers. Unfortunately, we don't own any trucks and can't block the streets.
Yeah. So, thank you. Anything else that you're seeing? I'm sorry, Richard. I've co-opted your.
Yeah. Anything else, Dr. Faber?
Any stocks particularly that because you were so good. Last time we talked about Bunge, Freeport. I can go down the list. They were pretty good from the time that we talked.
Well, I think the gold miners are cheap again.
Yeah.
But it didn't help that a mining company like Gatos suddenly had to cut their reserve estimates, which is it shows that geologists cannot always be trusted. but we live in a society which is basically dishonest, and I maintain that when you print money, you create a society that is greedy, that is out to make a quick buck. Get rich schemes flourish, fraud flourishes, you get huge wealth accumulation among some people who are successful speculators. It's not good for a society, this is for sure. But anyway, here we are. And as I said, we have to diversify. I think assets outside the US are relatively inexpensive. And in the US, if you buy real estate in the countryside, it's not as expensive as in the city, and it may be safer. So as far away as possible from socialist cities, and most large cities in America are run by Democrats and socialists and authoritarian people.
But I'm looking too. I've been buying European and actually Japanese banks. I love Mitsubishi because it's been it's the worst performing asset for 20 years in the world. But if rates actually do rise, I think that it's the same in what we're seeing in Europe. Banks can maybe breathe again as they get the as they get Lagarde's high heel off their throat, even as she goes kicking and screaming. But I have one pick, Dr. Brown. I don't know whether you know that the Moscow Energy Company. Do you know Montenegro? It's a holding of Gazprom. Gazprom owns.
Yes. Yes. I mean, Russian assets are very cheap.
Yeah.
I just bought some Russian stocks, but I bought them through an ETF. Usually I don't buy ETFs, but in the case of Russia, I did it. And I think the banking idea in Japan and also Asia is good. Some Asian banks have gone up a lot actually already. The Singapore banks have been very strong. They're still reasonably good value. Banks in Thailand have recently performed very well. And I'm looking at banks in Latin America and also in Europe. Some banks like Santander in Spain and Intesa Sao Paulo in Italy, they're doing quite well actually. And also Deutsche Bank. So I think there's still some money to be made, provided you don't get a complete implosion.
Yeah.
But I believe the Fed and all the other central banks, if asset markets drop 20%, they'll print again.
Yeah.
But they'll have to do a lot. They'll have to do a lot. And that will mean higher inflation and higher inflation. So I don't think, trading opportunities aside, I don't think that the bond market is attractive as an asset.
Yeah, it's only can trade it to me at this point in time. So the miners now, do you invest at all in Glencore? Do you follow Glencore? Is it any?
Yes, I invested more in BHP and Rio.
Okay.
But I think Glencore is a good play. I know the people that started it.
Yeah. I'm not going there. We'll let that one.
I wouldn't want to say anything bad about them.
No.
Hyper smart. I wouldn't call them the most honest people, but they're hyper smart.
Yeah.
And they are a huge power. This is now really a huge power.
Yeah. No.
And they know how to move things and so forth. Anyway.
All right. Are we still bullish food? I mean, somebody is when we talked, I'm sorry, I'm going to extend this a little bit, but we had talked about China using, and the yuan has been a strong currency. So everything we talked about last time, it's borne out that they've been able to stockpile. I think they've taken their shitty dollars and other currencies and stockpiled a lot of things that they use. I think it's helped support prices and drive prices. You see them doing that with gold?
Yes, I think but you understand, in the US, every politician has to go on Twitter all day long to broadcast his nonsense and has to put up picture of ugly faces and poor taste. And in China and Russia, you do that less. I mean, in Asian societies, you just do it less. And I'd say in China, you have actually some very good value companies that are extremely cheap because they have been kind of embargoed by the US State Department. In other words, you can't, as an American, I don't think you can buy them. So the companies that have been blacklisted by the State Department, companies that the US State Department, who is mostly composed of uneducated people, deem to be related to the government. Now, in the US, as you know, everybody receives some subsidies from somewhere. Everybody has government contracts. So they're all related to the government, period. But in China, someone like China Mobile or China National Oil Company and so forth, they are blacklisted. But for that reason, these stocks have become very cheap. And interestingly enough, I just seen a chart published by the bank credit analyst recently, or it was Alpine Research. It showed that the Chinese blacklisted companies have outperformed the Chinese stock market over the last 12 months. I thought this is wonderful. Yeah. So it's like to be blacklisted by the US State Department is like getting 5 Michelin stars at the restaurant.
Okay.
It is a distinction, a rare distinction of quality. Anyway, I have to go because once in a while I actually work.
I'm working as we speak, but thank you. This is always, I hope we don't wait so long. I'd love to do another one, especially because we get to cover the geopolitical. And I'll give a plug to Mr. Putin's banker, Elvira, Mistress of the Dark. I think she's the best central banker in the world going right now. She's pretty good.
Yeah, absolutely. Absolutely. But nobody talks about this, that actually the ironic situation is that central bankers in emerging economies are more responsible than our Western central bankers.
Yeah. Yeah, no.
But also in emerging economies, you don't have yet the woke culture such as we have in the Western world.
Yeah, that's true.
Okay, nice.
Thank you.
Thank you.
Yes, it's great. Thank you.
Ira, yeah.
All right.
Thanks.
All the best.
Thanks.
Bye-bye.
Bye.
Thanks. Take care.
The FRA Roundtable Insight Show is for informational and educational purposes only, and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.